Hello, everybody. I hope you all had a great weekend. I waited a while to make these videos because I just kind of wanted to watch a lot of financial news and read a lot of financial newspapers and magazines and other websites and webzines and blogs this weekend and just get a whole full feel for the market so I know what I'm dealing with. And what I'm pretty sure what I'm dealing with is a crowd that definitely wants to be bullish right now. I believe that a lot of people believe that we will head lower. Some think, though, that we're going to head lower right now, which makes me personally believe that since they think it's going to happen right now, since we kind of gave back a lot of the gains during the previous week, actually, like let's get rid of the last 2 days, we gave it back about 10% in 6 days, that a lot of people think that it's just going to break to the bottom. That means that I think on the short term we're going to probably rally back off the Obama inauguration, the excitement that's going to surround all of that, the good vibes, and then we'll probably eventually fail at the 200-day moving average or significant resistance at the early November highs or possibly the early October highs right after that one big down day at late September. But we'll see. Whatever the market does, I'll take my cue from. If the market starts to rally and all of a sudden beautiful charts and canceling quality charts start setting up in correct bases with proper volume patterns, and they break out on strong volume and those fundamentals are there, or a perfect chart is there, I'll be going long and I'll be turning bullish. However, if these charts set up in horrible patterns and then break down on heavier volume when the indexes happen to be right at the 200-day moving average and reversing on heavier volume, I'm going to get bearish. So remember, I don't ever interpret my opinions into my investing. It is simply what the market's doing. And what is the market doing right now? Well, clearly on a weekly chart here, the S&P 500 going back to early 2008, you don't want to be touching the market right now. Let's say that you normally invest when the price is above the 50 and 200-day moving average. You would have started to do that in 2004, and you would have been above the market all the way until around mid-2008. And then it's way far away from the moving averages, and it probably won't be a while till you get a signal to go long again. So that shows you where we're at on a long-term basis. But on the short term, you can see in the November lows, we had heavier volume initially. Then we rallied on low volume the entire way. The one day that we have huge volume here was the quadruple witching Friday, where the S&P 500 was only up 0.3%. So not really a big up day. And since then, just lower volume every day. Then we started to sell off in the middle of 2009 on January on higher volume. However, after we break below the 50-day moving average within 3 days, a very bullish reversal came about Thursday on higher volume the day before. But still, look at volume on this reversal compared to that quadruple witching day in December, or the heavy volume at the lows in November, or the heavy volume on the distribution in early October. Doesn't look like much. And the next day volume, not that much either. And so let's just put it on a 2-day. And on a 2-day, you can clearly see volume isn't that heavy compared to the volume on the downtrend or at that November bottom area or even on the quadruple witching day. So it's kind of hard to say that this is definitely a bottom. You know, we just have to basically say that this could possibly be a short-term bottom for now, but true technical analysis and the fundamentals out there indicate that this isn't a hardcore bottom. Don't put your whole heart into it. Dow Jones Industrial Average has about the exact same pattern. There's no difference. Let's take a look at the 2-day chart. You can see the nice reversal on higher volume, but notice that the volume is lower than at the November lows. It's lower than that reversal attempt in late October, and it's lower than the volume in September. Oops, there, in the volume in September. That's a weekly, and as you can see on a weekly, that's another distribution bar. So now you've got a lot of big red bars on the way down, one heavy volume bar, and now a breakdown in heavier volume. But that's a little late to come about. So still nice support, short term. Could definitely give us a rally back above the 50-day moving average. Could definitely send us towards the 200-day moving average. However, like I keep saying, unless we have nice charts with a lot of green in the bottom of this chart area and a lot of green in the middle of this chart area with not a lot of red in either one, we're probably not going to go that far. So just keep your bullishness in check for right now, because trust me, I keep on telling everybody, whenever I went long Taser, that was in July. The market rally really started in March 2003, and the bottom was in October 2002. October to November, November to December, December to January, January to February, February to March, March to April, April to May, May to June, June, July. That was 9 months till Taser started its breakout and run. It then went 2,390% in 9 months. Not only that, in November, a full 13 months after the bottom, I went long EGHT for a 300% move in 1 month. Not only that, in 2004, I went long Apple that gave me a 400% gain to the 2006 top. Not only that, I went long ERS that gave me a 550% return from 2005 to the 2006 top. Or Gig Media, GIGM. Is that what it was called? I can't even remember. Yep, Gigamedia. Yep, GIGM. And so whenever it made its 250% move from 2005 to 2006. So you don't have to get the exact low in a stock market bottom to make a lot of money. I almost slipped there. I came very close. All you need is a low and then a lot of volume off the low to say we're going higher, to then start looking for charts. And then when they set up and break out and go, you can make a ton of money. You don't need to buy the exact low. And if you look at your NASDAQ right here, look at a 2-day chart of the NASDAQ. The volume looks pathetic. So look at the lows here back in November. Look at the volume then. Look at the quadruple witching volume where the NASDAQ only was up 0.7%. That was higher than either one of the reversal days. The November volume was higher. Let me go out a little bit. The October volume was higher. The September volume was higher. And heck, the July lows had higher volume than the lows here in 2009. So, and here's what a weekly looks like, showing you that volume was once again below average. Look at how many big red bars there are in the past 6 to 8 months. Look, 1, 2, 3, 4, 5, 6, 7. 7 big red bars to 1, 2 big green bars. That's a 5 negative bar advantage for volume. So it's just not good. So like I said, short-term rally, yay, I got 5 longs and I'm ready to make a lot of money in them. By a lot of money, I don't mean 2,390%. I only mean maybe 100%. I'll flip my lid if I can get a 100% gain. So I just expect that to happen. I expect it to be a short-term rally, and then ultimately we fail. Now, before we leave, I want to go ahead and look at the commodities. Oil's around the 36 area. I have a feeling oil's going to be between 30 and 40 for a while. And then I assume if history repeats itself, going back to every economic crisis I've ever studied, we will have hyperinflation follow this deflationary period, because we are flooding our market with dollars and we are owed tons of debt. And that should just, I don't know. If we keep printing, I assume we're going to have hyperinflation. And that's why your safe bets are with the metals. And that's why platinum is starting to look good again. Look at platinum. I told you it found support. We could find support right at that 50-day moving average, and it looks like it did. But better off, look at silver. Silver is making a heavy clear break away from the 50-day moving average, if you ask me. When the silver got above the 50-day moving average in December, it was bullish. However, the move wasn't extremely bullish. This move in November was bullish when it had that big 9.4% move that day. But after that, there was not really any huge bullish day. Well, here it is now. The 6% move in silver now indicates to me that this trend is ready to turn up again. I could be wrong, but if I had a ton of, if I would have started investing in 1990 instead of 1996, and I got this in 1999, so I got it right at the end, you know, but if I could have done this in 1990 and gotten this by 1995 when iOmega made that amazing gain and from 1995 to 1996, and if I could have posted the chart before it was deleted, I could have shown you all of the max green bop and all the huge accumulation as it went on to run over 10,000% in less than a year, but whatever, I messed that up, so it's just whatever. If I had more money, I would probably get long silver and gold right here. Gold had a very convincing move over the December 50-day moving average here on 1210 and not on 1124 in November. The 1210 move was on 4.23%, and as you can see, it got above the 200-day moving average. Here it was weak on, let me give you the date, 1217, but on 1226 convincingly took out the 200-day moving average. Sadly, it didn't hold and looked like it was ready to break, but it wasn't time to get rid of all year long until it actually broke below the 50, and it didn't. Instead, gold seems to have had a very powerful 3% move, and when I add that with silver's move today on 6%, I would say that I'm going to probably turn bullish on these commodities now and would expect our silver and gold stocks to start setting up pretty soon, like NEM and AUI, but we'll see. But let's look at the dollar as our last one that we're going to look at before we go. And as you can see, it had another bullish tail today. It's still in an overall uptrend since December and the August-July lows. So there's no reason to sell the dollar if you're long the dollar. Just continue to hold your position. I'm going to go ahead and wrap it up there. This is Josh Hayes of BigWaveTrading.com. Aloha.